Hi folks, welcome to this YouTube channel. Long time no see. Right, so in this video, we'll be going straight to the point. I'm talking about exactly how I approach the London session, right? For those of you that know me, you know that I mostly trade the London session, right? That's when I'm mostly active because it's in the morning hours in my area, which is Nigeria, and um, that's when I'm a bit more chance to trade the markets, right? I'm not always so involved in the New York session, right? So I want to give you guys the no-brainer approach to trading the London session, right? I'm not trying to copy anyone. This is just exactly how I approach the London session, right? How I approach it. Right? I'm not teaching guys this step-by-step approach, right, to my London session trading, right? So now, first of all, the first thing you have to understand is that when it comes to the London session, you must understand the characteristics of the London session. Right? The first thing you have to know that most times the low of the day usually forms in the London session. So we usually see the low or high of the day in London, right? This is basically one thing you usually see in the London session, right? So that means if the market is bullish, most times the market will tend to do what form the low during London and then rally higher, right? And most times the market is bearish, the market tends to form its high during London before there's trending lower. This is one thing you must know. Typically, the market usually forms its low or high of the day during the London session, right? And this is not always. That's the first thing you must understand. You must have that at the back of your mind. Now, what is the importance of that? Now, the number two thing you must understand is that you must understand what the anatomy of a daily candle. And I did that in my bootcamp video where I talked about the power of three, right? So I'm going to be using this opportunity to introduce the power of three briefly before we continue, right? So now we're going to talk about the power of three, right? The power of three. I learned this from the ICT, the inner circle trader. So shout out to him for teaching me this concept, right? So typically, if you're looking at a bullish candle, right, it's still the same thing what I just explained to you guys. Typically, a bullish candle on the daily time frame usually does what? It forms its low before making a high. This is what a bullish candle looks like, all right? And this is what a bearish candle looks like, all right? Most times on the daily time frame, right? So on the daily time frame, using the candlestick chart, the bullish candle usually looks like this, right? You usually see the market drop down before rallying higher, and the market rally higher before dropping down when it's bearish. So this is a bullish scenario, and this is a bearish scenario, right? This is what you basically see during the candle. That to just illustrate that, just quickly look at the chart. You can see now the market is bullish. It tends to form a low first before rallying higher. When it's bullish, it tends to form a low first before rallying higher. Why if it's bearish, it tends to form a high first before running lower. When it's bearish, it tends to form a high first before running lower, right? I want you guys to understand these things first before we go into the real examples. I want you guys to get this gist from the beginning. So you have to understand that when the market is poised to go higher, it tends to form what? A low first before going what higher. And the market is poised to go higher. I mean lower. It first of all goes higher, do what? Before going lower. So this fake movement is also called manipulation, right? It's called manipulation. So the market is bullish, it tends to form a manipulative leg lower first before we're doing what? Rallying higher. And if the market is bearish, it tends to form what? It's a manipulative leg higher before rallying what? Lower. Right? So these are the things you must have at the back of your mind before you can effectively trade a London session. So you must understand this. Now, when you've understood this, I don't explain. You can watch my video. I'll be posting the link to it on this video where I talk about the anatomy of a daily candle, right? So you can watch my video on anatomy of a daily candle for better explanation on this, right? Now, the next thing you must have in mind is that you want to be focusing on what? The London pairs. So London pairs are pairs that have what? Euro and GBP attached to it. These are the London pairs, right? So we're focusing what? On the London pairs, right? If you're looking at EU, looking at GU, you're looking at EJ, you're looking at GJ, you're looking at EG, right? You're looking at GA and EA, right? All those pairs, EA, GA, right? Those are the pairs you're looking at for this London session, right? Those are the pairs. Why I focus on it? Because they're London pairs, right? The London countries, like countries like Frankfurt, Germany, the UK, England, they all use these currencies, usually use Euro or GBP, right? That's why we are focusing on the pairs that have Euro and GBP because that is their most traded pair, right? So when the London Bank open, its native currency is what? Is Euro or GBP, right? So you want to focus on any of these London pairs. But for me, I like to focus on EU, either EU, GU, GJ or EJ. So I'm looking at only four of these. I'm looking at either EU, GU, GJ or EJ. I don't trade EJ, I don't trade EA, I don't trade GA. I'm not looking at EU, GU, GJ or EJ. Right? Those four pairs. I do look at during the London session. Right? So the pairs you must focus on for this to be effective, right? So when you have done this, now you must understand time and price, right? So time and price will depend towards the Q zone, right? So we must understand time and price. So now the Q zone is the period in which you will see this setup I'm talking about from, right? And the Q zone is what? Between 2 to 5 a.m. New York time, right? So you might need to calibrate um your time zone to this, right? So for those of you in Nigeria, it's simply between 7 to 10 o'clock, right? So between 7 to 10 Nigerian time. So my trading view is already at, you can see my time zone is at New York, right? That's why I really use New York time, because um most of the time concept I used are based on what from the United States, right? That's what I usually use for my trade time distance strategies, right? Now when you have your 2 to 5 New York time, this is the time you look for what opportunities, right? Not note that it must not, the market must not hit TP or hit your, it must not activate. Now, this is the time that the setup form. This is the time you want to be trading. You want to put in your limits or possibly get activated, right? And all of that. So you're looking at for your setup to form between 2 to 5 a.m. So this gives you what a specific time to be trading. So you can come to your chart between by 1:30 New York time and start monitoring it. Once it hits you, you want to place in your limits if there's an opportunity, and then you want to do what? Be as being a trade, maybe sometimes it hits TP before 5, sometimes it even activates by 5 and then lags into it's not always the most, it's not like it must activate you and hit it in 2 to 5, but 2 to 5 just gives you a specific timing which the market started getting volatility and possibly, and most times when I get in the trade by 2, but sometimes it even hits TP by 2:45 p.m. I mean 2:45 a.m. New York time. Sometimes it hits TP by just 1 hour. Sometimes 15 minutes I've hit my TP. And that is why, right? So now, these are the things you must have at back of mind. You must understand that London short usually forms higher a lot of the day. You must understand the power of three, market going up and down. You must focus on the London pairs, and then you must have this time as your time of reference. That is why you want to be placing your trades. You want to be looking at the chart, you want to be focused on what this London pairs, right? And every day, if you look at any of these London pairs, you will see a stop on any of them, right? For me, I like to trade only EU, GU, GG, or EJ, right? And then the next one to do is that you want to have what an understanding of what the daily bias. The market is going to be bullish. This is top-down analysis now. You have to understand what the daily bias. And daily bias, when you're talking about the bias, you're looking at what does the market want to so basically two things that you look at for daily bias, right? Does the market want to fill an imbalance, or does it want to take out a liquidity, right? So those are the two things that really drive price. Is the market likely to go and fill an imbalance, or does it want to go and take out liquidity, or is it reversing from a liquidity point, right? So the market, the market takes that maybe you have a high, if you have a high, and market takes it out. Most times, this might be what a sell opportunity, right? So you want to look at the market. Is the market taking out? Is the market taking out liquidity, or is it going to take a liquidity, or is it coming from an imbalance, or is it going to fill an imbalance? So you must understand the bias of the market. So those things kind of drive price. So if you can spot if the market is going to go to an imbalance, or if it's rejecting from an imbalance, is it going to another block? Is it rejecting from another block? You have to understand what the higher time frame is doing, right? So this is where the skill is really, you must understand what the higher time frame perspective, right? Higher time frame perspective. It's very important to understand the higher time frame perspective when it comes to trading London session, right? So that is, you must understand where the market is on the daily, and then want to understand the daily bias, the higher time frame what perspective, right? When you have gotten all this in play, then you cannot simply do what? Use this simple trading model, right? So the trading model is very, very simple, right? Very, very simple. So it's able to use this trading model, right? And trading model is this. Number one, the first thing you want to do is that you want to be waiting, you want to be delineating what your Asian range. So this is your Asian range now. So you want to be having what your Asian range at the you want to have this is the lower time frame approach. This is the lower time frame model, right? You trade this on the lower time frame, right? So you have to mark your Asian range, which happens between what 7 to 12 a.m. New York time, right? Right, you must have this at the back of your mind, right? So you must delineate your Asian range, which is 2 p.m. to 12 a.m. New York time. You must have that Asian range marked on your chart, right? And then you want to now have the Q zone hour, which is what 7 to 12, right? So this you have your Asian range marked here. Then you want to have your Q zone at this spot, right? So you want this will be your Q zone now. So you have your Q zone, which is what Killzone. This is all in your time. Oh. Killzone is what 2 to 5. Right. So your Killzone forms by 2 to 5 a.m. Right. And it's all in was New York time. Right. So now the market forms this range. The market forms this range between 7 to 12. So you watch that Asian range, you mark the high and the low, and then between 12 and 2, most times the market is bullish. By 12, the market usually drop first to drop below the Asian range, and then it's not give you kind of confirmation to do or take price long, and then you cannot right. So this is not this time period. This time between you have 7 to 12. Then this is the time which you're not doing anything. You're just simply watching the chart. So between 12 and 2, the market usually form what? If the market is bullish, you mark what? This is the midnight candle. So you mark that midnight candle. You want to have you want to be marking the midnight candle. So after the Asian range, you mark the midnight candle. And when the market runs below the midnight candle, it doesn't always have to take out the Asian range. It doesn't always have to, but sometimes, most times, it takes out the Asian low and then it rallies. This is the Asian high, sorry. This is the Asian high. Oh, let's use this. Oh, this is daily chance. Right. So now the market will likely form this is the Asian high and the high of the Asian session, and that's the low of the Asian session, right? This is the low of the Asian session, right? The market is usually concentrated around there. So the market is bullish. I remember what I told you guys, the market usually goes below before rallying higher, right? So now as the market goes below here, you're not looking for what? A buy confirmation below the Asian range. Look out for maybe a structural shift or any of the confirmation which I've taught you guys in the paid mentorship group, and then use it to do or take your buys. And when you take your buys, your first TP should be what? The Asian high. So targeting with that Asian high level, this Asian high here, that's the first TP. And then if you have a higher time target, you go ahead. This is just a simple model I use for London session. It's as simple as this. Right? So you know that the market forms a high or low for the day. You mark your Asian range on the lower time frame, preferably 15 minutes time frame. Use the 15 minutes for best or 5 minutes time frame for this. Then you wait for the market to run below if you're bullish. All right. If the market is bullish, you want market to run below first and then give you a confirmation to do what? To go long, right? So look for the market to give you that confirmation to do what? So when market to give us that confirmation below here to do what? Go long, right? And that should happen between 2 to 5, right? 2 to 5. So that's what they're basically doing. So this is just the simple model for the London session. The reverse is the case for a bearish scenario, right? So for a bearish scenario, it's just very simple. You mark your Asian range, right? Same thing. If you're bearish, what the market to do was go above the Asian range. It doesn't always have to. Sometimes it can just go above midnight open candle, just above that midnight candle before giving what a sell opportunity. So typically, this is your point of reference, this midnight candle. Once price goes above it, right? You start looking for what? Sell confirmations. And especially if there's an Asian high they're taking out, you see the market to take out the Asian high and then give you what? The sell confirmation to what to take price was lower, right? Understand this. I'll show you guys the real chart example as we progress, right? So these are the pairs that you're really looking at, right? So you can also add GBP chef and GBP card, right? I also have GBP chef. Any pair that has GBP, you can look at GBP chef as well. GBP card, all those, Euro card. You can also look at that too, right? But for me, I like to look at EU, GU, and all of those forces, right? So these are the simple trading model I use for my London session trading. This or nothing above, nothing more than this. So now let's go to a real chart example and see all this things in real detail, right? Now let's look at this. So let's look at this. The market was, bullish. What do I mean by bullish? If you go to the week time frame, we are bullish. I caught some good buys on this. So look at this. You can see this other block, right? So market is bullish. So you can see the high, the low, and the new highs. Markets came to this bullish other block, and then you can see the market was going for what? This liquidity. So we had what our draw on liquidity here, right? On the weekly time frame, right? So we want to look at if we can catch buy. So now we have our daily buy, which was bullish. So simply come to the lower time frame. So the daily, can see how each daily candle gave us that setup, right? Can see how each daily candle gave us. Can see markets ran below before going higher, ran below, went higher, ran below. Can see how all the daily candles gave us what? That bullish sentiment. Run below, higher, run below, higher, run below, higher, run below. You can see how this model play. How this equal highs. So I had this draw on liquidity here. So this was very perfect. We saw the market giving what a bullish structural shift. Markets broke this high again. You can see markets breaking multiple highs. It broke this high, and then that was a bullish scenario. And the market was rejecting off this imbalance. So I had an imbalance here. The market was playing off this imbalance, at this point here. The market was, giving those bullish scenario, right? And finally, the market did what? It took out this liquidity and I took out this low, right? So the market was really, really bullish from a daily perspective. The market was poised to do what? To go higher, right? So now we have understood the market is bullish. And I know something. This model works very well between Tuesday and Thursday, because that's when this thing happens very clearly. So between Tuesday and Thursday. So Tuesday to Thursday, the days you want to see the market do this very perfectly. Because most times on the Monday, let's look at the weekly time frame now. Most times on Monday, you can see the market is bullish. The market tends to go lower before going high, right? Sometimes on Monday, on the weekly time frame, this lower week might be what? Monday, right? So sometimes Monday might not give you that perfect opportunity because the market is still was forming its low on the weekly. So if you're trading this model, be very careful with Monday morning. Right? Try to avoid Monday London strong. Right? Allow price to do his thing before getting involved. Right? So you usually see the market move very smoothly between Tuesday and Thursday. While Friday is usually what a reversal, right? You can see the market reverse on Thursday. Just started selling down. It didn't really move up on Friday because this was Friday candle. You can see how Friday candle was very, very small compared to others. So reversal usually happens on Fridays. So now we have understood all this. Let's go to the 15 minutes. Let's go to the 15 minutes time frame, right? So let's look at each individual day to see how we would have actually got involved in beautiful trade. Let's look at where the buyer started all the way down here, right? This is where the buyer started, right? So let's look at this, right? So now you want to mark. I have an indicator which I use to check Asian range. So I can simply just go to the indicators, come to indicators here. So here, just simply click on Asian range. You see this indicator by Rick Trader. So just simply install it to show you Asian range without having to plot anything, right? So now I have my indicator plotter showing in Asian range, right? So let's start from here. Now watch carefully. And then what I taught you guys. Now look at the market. The market bullish, yes. What did it do? You have an Asian range. This was you can see the midnight candle here. Right, see the midnight candle here. And the market it ran below. Although it did not happen during London, market ran below. Right, came below that Asian range, but it was giving a confirmation here and then rallying was higher, right? Although this did not happen during London Killzone, but the market was kind of stalling during London, and that is very fine. It does not happen every day. All right, so look at this as well. This was the kind of sideways market. There was no really particular move on this. Market was very sideways, and then let's look at the data was very, very clear. All right. Let's just go back in time a bit. All right. EU's price action has been so random, like for reals. All right, so let's look back again. So the markets opened rallied below, right? Took out this this consolidation before them was rallying higher. Had a buy confirmation here. Although this did not happen during the Killzone hours, and that is very fine. We saw the same thing happen here. We saw our Asian market did what? It ran below it during the New York session. It gave the confirmation it was rallied higher. And this was the data did not play out fine. And then what happened again? Another Asian range issue. This is not even good at all, and that is very fine. You can see, watch very carefully. You can see markets ran below. I told you guys that it doesn't always have to go below Asian range, especially if the market did not range. It doesn't always have to go below Asian range, right? It can just go below the midnight open price and give you a buy confirmation there. So you can see the same thing happening. The market went below the and then gave you what a buy confirmation. What is that buy? It hit this or this other block. Right? This is other block it hit this other block, and then it went higher, right? So market hit this, this last down candle, right? It hits this old other block here, and then it rallied higher, right? This is a 15-minute chart. If you take 30 minutes, I'm very sure that there was two candles or something of that sort, right? So look at this as well. Rallied below, hit this other block here, and then rallied higher, right? This was very, very explosive. There was this, I think, was because a lot of news, and that's how the market has been. The same thing happened there. You can see it went below, though it did not take an Asian low. I can see how this all happened during what the move started in the Killzone, and the market rallied higher. And then look at this as well. Once below the midnight price during London Killzone, you can see market bought beautifully, took out what this Asian equal highs, and then rallied higher. And then that is it. So let's look at another pair. EU was not really clear. Let's look at GA. Let's look at GA. E was not really clear this week. It was just so sideways. Let's look at GA and see if we can do the same thing of GA, right? So this is GA. All right, this is GA. All right, let's look for where the market trended very well. Right, so this is I'm looking for where the market gave a very clear trending movement. All right, so the market took out this liquidity. We are still the market took out liquidity. This liquidity resting here, and then gave what that bullish structural shift. The market took out this old high here. So the market really gave was very clear buy here. They took out. So this was kind of liquidity sweep to buy higher, right? So let's look at this from here. This so the market was clearly bullish from here. The market get a clear bullish confirmation up to this point. Let's simply look at this point just here. Between 13th of June to 28th. Right, that's what we're looking at. Let's go to the 15 minutes time frame. That's what we're looking at between 15th. All right, so let's look at that period, right? All right, so yeah, so we're looking at this 15th. All right, that's not it. So this is I have seen it. So the market was likely to go higher. I think GA will give us something clearer, right? E was just so impulsive, right? Very clean. So GA can see the market was wanting to go bullish. Can see the market it went below the Asian range, gave us a bullish break, kind of gave a good sweep here, right? And what happened? The market was exploded higher, right? And when did this happen? Where is my Q zone? Why is not showing? Okay, just simply mark the time. So it's not difficult. So let's just simply mark the time. Okay, between 2 o'clock, this is 2 o'clock to 5. You can see how this happened very beautifully. This 2 to 5 around this period. And the market, did all this. We have gotten beautiful buys here, all of that. The same thing happened there. Asian range market ran below it, and then bought again. They take out, went above this high, they bought this candle, and then that was it. You see another one here. This is not really range. I will not really consider an Asian range because the market did not really range, right? You want to see the market consolidate during Asia. This is very beautiful. Market gave you a range, ran below the midnight open price, ran below the Asian low, and then gave a beautiful buy. You can see this bullish market shift, right? This is a bullish market shift, very clear here. Market bullish market shift. Markets came back, hit the imbalance here. There was a little imbalance inside there. Let me show you that quickly. So I had a bullish imbalance inside there. Market hit it and then very beautiful buy, rally higher, right? So this was not really a range to me. The market was impulsive. I wouldn't really consider that as a range, so I would really avoid that. This was another one. Didn't really consolidate. You want to see the market consolidate? You can see very clearly. You can see the market gave a kind of consolidation. What happened there? It's wicked below the Asian range. Went below the midnight open candle. Always one market to go below that midnight open candle, right? And then rally higher. Let's see another opportunity. So that's just how the market has been since then. So this was, you can see the market still, weak below this a bit before rally higher, right? So this was virtually a very beautiful one, right? And this happened, this happened nicely, right? You might need to backtest this to really understand all of it, right? This was not Asian range, so there's no opportunity here, right? This also was nice as well, right? It was nice as well. Markets, went below. There was no really the market already took a liquidity here, right? That's what market did not buy. Right? So market already took a liquidity here before coming below this. So that's not really a trade for me. This was one opportunity as well. You can see there was no consolidation here, and that is it. So we want to see markets consolidate nicely before really considering these things, right? So you can see another one here. Markets went below Asian low, though it did not really consolidate. Went below it, Killzone this blue line, and then right higher. You can see another one. So that is it. So this was, I think it's the end of the period we're looking at. So this is the end of it. And yeah, that's just been it. Look at another opportunity here. Market want to go bullish. What happened? Asian range. Market went below, took out this liquidity, and then rally was up. Right? You can see. So that is just how these things occur, right? So I want you guys to really back test on this. This is really how I traded London. So notice that it's not every day you get an opportunity, right? Just simply back test on the test you trade, EJGG, whatever you trade. And you see how beautiful this thing deliver, right? It's really, really nice if you understand the higher time frame perspective. I'm not showing you guys the lower time frame. I'm not really looking at the higher time frame, right? So you have to look at the higher time frame and know what the market is about to do that particular day. And then you anticipate the market to go below the midnight price. Knows that it must not always take an Asian high or low. We want to see markets go below midnight price and give us a confirmation for what your trade direction, right? So this is basically how you do it, right? So like for now, we have hit this other block. Market might start to do was go higher, right? Market might start to go higher now. Let us look at 15 minutes of the current day. Let us look at what happened recently on Friday. You can see what happened there. Market rallied below Asian low. What happened? it broke this order block, went above this order block high, and then came back there. Beautiful buy when during 2 to 5 Q zone, and the market rally higher. Right? So that was a very, very beautiful buy opportunity, and most likely we might see that continue for the rest of the week. Right? So my GA position is the market might still want to make a new high. Market might like to want to make a new high above this high. It might happen, might not happen. Let's just watch. Although yeah, let's just watch. Right. So let's just see. Right. So you just be very careful of this imbalance here. So that is it. So if you want to join our paid mentorship group where we explain these things in details, where we break all these things down step by step, because I was very fast. I can't explain everything in just 30 minutes, right? So if you want to join our paid group where we explain all these things in details, do want to use the link in the description to join us, and I will see you guys in class. Right? So have a wonderful day. Cheers and God bless.